So we downgraded the stock to sell following our recent channel checks, and which indicated that the domestic same-store sales had been down in the mid-teens since the company's founder used a racial slur. We think the fundamentals continue to deteriorate, and we think the implications are significant to the company's profits, as well as the franchisees' profitability, which we think has deteriorated quite a bit this year.
Chris, this new strategy by the board to try and prevent the founder from taking back a controlling stake, is that enough to distance the racial slur from the brand itself and the perception and the damage it's caused with consumers?
I don't believe it will serve that purpose. I'm not sure how many consumers will recognize what a poison pill is, but I think their decision to adopt it really was to just give the board and the management team time to kind of assess the current situation without having any pressure of fending off a potential hostile takeover. And I think it's going to take a while to assess the brand damage, and it'll probably be more apparent as they go into the NFL season and college basketball, where you have higher sales volumes.
You mentioned, Chris, that the franchisees will likely need help, that their revenues or their earnings could decline by about a third, and that the parent company will probably step in and have to provide them some help. Does the parent company at this point have the wherewithal to actually do that, or will we actually see many store closures to come?
Well, I do think we'll see store closures, but I also think the company can do some things to help provide some financial assistance, including maybe royalty abatement or royalty relief. Franchisees give a certain percentage of their top-line sales to the franchisor, which is Papa John's Inc., and I think the company can provide some relief to them by reducing that rate in the near term. But the franchisees are going to struggle with also, we think, turnover. I mean, delivery drivers are probably making less money. They probably have fewer runs scheduled for fewer hours. So that turnover in a tight labor market could make it difficult for recruiting and training.
Chris, sum it up for us. What's your latest price target following the downgrade?
$38, 12-month price target.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.